Well, folks, the short sellers have gone all in to shorting TTCF stock and Corsair Gaming CRSR. And in this video, I'm going to show you exactly what's going on here. I'm going to share with you what I think is going to transpire here. We're going to talk about what will it take for the shorts to be right in a scenario and make a bunch of money, okay? Then we're going to talk about essentially like what could go wrong for the shorts here and what prices would squeeze happen at, okay? So yeah, this is going to be an interesting one, but literally they have gone all in. As Corsair and TTCF stock price have gone down over the past few months, they have gone heavier and heavier and heavier, and they are max shorting these two stocks right now. So I hope you guys enjoy this, me bringing this out to you. Make sure you subscribe to the channel. If you have not hit that subscribe button yet, it's absolutely free to do so. Make sure you hit that subscribe button, okay? So what I'm showing you here, these are the most shorted stocks in the entire stock market, okay? These are the companies with the largest proportions of outstanding shares currently sold short. And what we're going to find is TTCF and Corsair Gaming are among the top 15 stocks in the entire stock market that are shorted. Think about this for a moment. There are thousands and thousands and thousands of stocks in the stock market, and those two particular stocks are two of the most shorted in the entire stock market, okay? So nonetheless, this is a huge deal. When you're two of the top, and remember, these are two top stocks I've been buying for several months now. I've been loading up on these shares. And as these stocks have fallen, here I am loading up on these shares going long, right? Meanwhile, short sellers are loading the boat, shorting every share they possibly can in these two stocks, right? In terms of the borrow interest rates, they've gone up substantially, okay? And this is just very interesting. And you know, there's a big difference between these two companies and a lot of the other companies on this list, but nonetheless, it is a huge deal. By the way, I just wanted to show this. Somebody, one of the people in my private stock group, they got their Model Y yellow. I'm not sure if it's the exact same shade. It's kind of hard to see on the pictures, and unfortunately, I don't have my X in the garage right now, but oh man, I just love it. By the way, did Tesla do a good job on the Model Y design or what? Like, I'm in love with the Model Y. Like, seriously, like, I think that is one of the most beautiful vehicles ever created that's under 100K. Like absolutely insane. The fact that you can get one of these for like 50K is ridiculous to me, because I just think it is such, and I'm not just being a Tesla fanboy, like seriously, I think it's just an unbelievably good looking vehicle. So anyways, that's just completely random, but yeah, thumbs up to that person who got that, okay? So think about this for a moment. Corsair Gaming, the stock is pretty much at its 52-week low, right? Not its 52-week low, its all-time low. Here, Corsair is pretty much at its all-time low, and short sellers are max shorting this stock at its all-time low right now. A company that recently has had a market cap under $2 billion. Company's expected to do around $2 billion of revenue in 2022, which basically puts this company at a price-to-sales ratio of about 1. This is a leader in the hardware space in the gaming sector and a leader in the streaming hardware space, right? Plus, they have other businesses as well, but those are two main core businesses. And those are categories that are supposed to grow exponentially over the next 10 years. Gaming, streaming hardware, like, I don't know when those industries don't grow, but they should be growing for a long time in the future, right? And yeah, and here the company is at a forward P of 15. So if you're shorting Corsair, it's hard to make a valuation case around shorting this stock, right? I mean, at a 15 forward PE, at a trailing PE of 18 roughly, it's a difficult stock to make any sort of judgment. And by the way, this screenshot is from the Hungry Bowl. So if you haven't downloaded the Hungry Bowl yet, do so on your iOS and Android store right now. It's how you track your stocks, cryptos, keep up with what's going on in the market. Listen to earnings calls right inside the app. Read SEC reports right inside the app. It's all so dang easy on the Hungry Bowl, okay? But that's extraordinary, right? Max shorting the stock when it's at its all-time low, at its current valuation, okay. If there's one thing I can say about the short sellers, I don't know if they're the smartest group of individuals out there, but I can say, man, do they like to play with fire. That's what I will say. They have guts. That's all I'll say about that. They have guts. Same exact thing with TTCF. TTCF recently has been trading right around its all-time low for this company, right? All-time low. Market cap recently has been about $1.2 billion for this company. Obviously, a company that's going after massive TAM. Like, think about the TAM TTCF's going after over time in the food space, the plant-based food space. And here they are. They're getting into every single retailer right in front of our eyes. They're getting SKU expansion into the retailers, right? And on top of that, I mean, there's a lot that's going on there, right? And they're going to get into the snack category, meal replacement bars, and all those sorts of things, nutritional bars over the next year as well, and get those into retailers. And it's like, wow. Wow, you got some guts trying to short this stock at its all-time low. That's all I'll say about that, right? Remember, this past quarter for Tattooed Chef, TTCF, that was considered a disappointing quarter, right? Disappointing. Company still grew revenues 44% year over year. And the most important part is branded revenue. The actual because basically Tattooed Chef has two businesses. One is their private label business where they sell like private label products that are very, very low margin. They're slowly getting out of that business. And the other is their higher margin, or what will be a lot higher margin business long term, which is their branded Tattooed Chef business, right? Which is ramping up. Branded revenue increased 56%, right? So essentially what this is telling you is the branded revenue is what's taking off, which is going to be long-term a much higher margin business, which will help out profitability in a massive way. Meanwhile, they're scaling down their private label business, okay? And so nonetheless, like, my gosh, think about that. You're shorting a stock that had a disappointing quarter with 44% revenue growth and 56% branded revenue growth. Woo! Okay, that's what I call you playing with fire. Look at this. It's not just about their crazy growth. It's about the cash position for this company, $100 million plus cash position. Remember, this company's what, a $1.2 billion market cap? Like, that's ridiculous to have that much cash on the balance sheet. So it's not like this is one of those companies where people are shorting and it's like, well, they might go out of business or something like that. Like, no, okay, they're a crazy growth engine. And they have crazy money around. Any sort of fears around that is just like literally you're delusional if you believe that, right? Think about this, right? For the full year, revenue is expected 41 to 45% revenue growth, right? Gross margins in the range of 12 to 14%. This is very key because the margins are about to go insane over the next few years for this company as their business scales out, as they get more and more products into retailers, and as they scale down their low margin private label business, which is going to scale down over the next few years, right? That will help the margins increase because then more and more revenue is coming from the branded products, which will be way higher margin over time than selling private label. Like, selling private label is all about selling as cheap as possible. When you own your own brand, you have a lot more pricing leverage, right? So gross margins are likely going to go insane over the next few years. And the shorts are going to look at this and they're going to see gross margins in 12 to 14% to all of a sudden 14 to 16%. Then all of a sudden 16 to 18%. Then all of a sudden 20% plus, which is where this company will be long term. I think 20% plus is very, very doable for a business like this, if not getting over 25% plus in future years. And so here you are, you're watching a revenue beast company, a company that's innovating as faster than anybody we've ever seen in the food space, right? And their margins are set to go up exponentially over the next 5 years. And, people are max short the stock, or certain funds or, folks are max short the stock. Woo! If that's not playing with fire, I don't know what is, okay? So let's talk about what the short sellers need, and then we'll talk about, how a short squeeze could happen, what prices it would happen at, and those sorts of things, okay? So what one of the things short sellers would need to make a bunch of money in the shorting these two stocks is they would need a lot more small cap devastation, right? Which is certainly a possibility, right? Think about tax loss harvesting. I think most folks have already tax loss harvested in Corsair and Tattooed Chef, but there's no doubt there could be more people that come over the next few weeks. Like, think about this. I'm recording this video on December 7th, right? Which means we still got another 3 weeks of the market being open, which means there could definitely be more tax loss harvesting coming over the next few weeks if folks haven't already done that, right? I think a lot of folks got ahead of this because I think a lot of folks looked at this and they're like, we want to buy back the first week or second week of January. So I believe what happened is a lot of folks basically took their tax losses in the last couple weeks of November and into the first week of December, essentially, okay? But it's no doubt it could happen more. What if there's more inflation fears or something like that? Oh, inflation's not as transitory as once thought. Anything like that, right, could cause more small cap devastation. So there's no doubt the shorts right now, they need more small cap devastation to happen, right? So that's something they need, right? Second thing they could need is they would need massive misses for Tattooed Chef and Corsair Gaming when it comes to their quarterly earnings, their upcoming quarterly earnings that will probably come out in 1 to 2 months from now, right? Either in the back half of January or some point in February. Now, keep this in mind. Both those companies' expectations have come down quite a bit, right? Tattooed Chef still has very, very aggressive growth targets. I don't see any reason why they can't hit those growth targets, to be quite honest. And when it comes to Corsair Gaming, analysts on average have this company having revenues go down over 13% year over year, okay? So the expectations are not sky high for these stocks. And when you got a stock price that's already been devastated, right? You have to come in with such devastatingly bad numbers to get that stock price to go down more, right? It's no different than on the upside. When you are in a stock, right, and the stock is skyrocketing, it's just going crazy, right? You need that company to come in with ridiculous quarterly beats, right? That's just insane to have that stock keep going up. Because what ends up happening is you're already priced in for perfection. It's basically called being priced for perfection, right? Where if a stock price goes too high, you're priced to perfection, and almost unless the earnings are perfect, you're going to go down. They'll find something to make the stock go down. This frustrates a lot of investors in the market because they'll be in a stock and they're like, "What the heck? My stock beat earnings. They beat on revenue. They beat on EPS. Let's say they beat on margins. They guided great, and the stock price went down." Well, it's probably because that stock was already priced for perfection, and it almost didn't matter what that company reported, they were going down, right? The opposite effect happens when a stock is going down and down and down, and it's at its 52-week low, right? And it keeps breaking 52-week low after 52-week low. As long as earnings aren't a disaster, a lot of times those stocks will shoot up 10, 20, 30%. And this also frustrates people, especially short sellers, because they look at it and like, what the heck, man? Those earnings weren't even good, and the stock goes up 25% the next day? This is ridiculous, right? Well, when you're already priced for the end of the world, which is when your stock goes to new 52-week low after new 52-week low, right? When you're being priced for the end of the world, and it's not the end of the world, and it's just halfway decent, your stock gets rewarded handsomely, right? Never mind if you come in with great numbers. That's a whole other side, and that's when you get into some crazy, crazy massive short sells, okay? So, in my opinion, if you're thinking about short sellers, I think ideally they need two of these things to kind of work out here. They need more small cap devastation, and simultaneously they need the next quarter numbers for Tattooed Chef and Corsair to be a disaster, right? And also remember how much money is likely gone to the sideline for these two stocks. That's going to come back in January. Remember how many folks in funds have likely tax loss harvested over the past few weeks and could over the next few weeks, that money is going to flush back into these stocks in January and February, right? That's another kind of food for thought. So yeah, it's certainly a possibility. It's just, I would call it more of a long shot possibility, okay? Now, in my opinion, in regards to Corsair Gaming, then we'll get to Tattooed Chef. In my opinion, in order to see massive short squeezes, I think the stock has to go over 25. I think a lot of the short sellers have shorted the stock anywhere from $26 to $21, okay? And so as long as the stock is under $25, I don't think short sellers are too scared, right? It really needs to go over 25, and the more it goes over 25, the more you're going to get short sellers to start to panic cover, essentially. And when a short seller covers their shares, just for folks that maybe don't know, they have to buy back the shares of the stock, which makes the stock a lot of times go up. And this is why you can get some epic short squeezes, because it's like short seller after short seller after short fund is covering, right? And all of a sudden you're in this situation where the price just goes to the moon, literally, because everybody starts to cover at one time, right? And so I think in order to see any sort of major short covering, short squeeze, I think Corsair has to go over 25 and show a rapid price rise after 25 to make short sellers say, oh my gosh, I'm starting to lose. Because imagine you're shorting the stock at 23, all of a sudden it goes to 25, and you're like, oh my gosh, this baby's going to 26, 27, cover, right? Or you're short at 24, or you're short at 25, or maybe you even shorted early on this one. Maybe you shorted at 27, 28, right? And all of a sudden you're looking and you're like, my profits, I'm losing my profits. In Corsair, you can't long-term short a stock like Corsair. Because at the end of the day, Corsair is a needed business in the market, right? Like, gaming hardware is not going anywhere in terms of down, right? And streaming hardware is not going down long-term, right? Those are two huge growth engines for as far as I can see. Corsair is constantly innovating, coming out with new products that are going to be highly relevant in the market. And so Corsair is not the type of stock you're shorting to zero. You're trying to short Corsair to hope it gets devastated in the short term, right? It goes down to 18, 17, and you cover, right? That's a hope as a short seller. You can't. This isn't the type of stock that you short to zero like other short positions, right? And so that's kind of my opinion around that one. You gotta get over 25 and show some major price movements to get a major short squeeze. Tattoo Chef, I think 18 plus, and you could get covering starting in mass if this one starts to show major volume coming in at 18 plus. A lot of these shorts are short at 18, 17, 16, and so yeah, I mean if you're 18 or under, a lot of these folks, the short sellers aren't that scared, right? But as soon as all of a sudden you hit 1850, 19, 1950, 20, 21. And the thing with the Tattoo Chef is this is more of a cult stock. So when it starts going up, there's no saying it's going to ever come back down, to be quite honest, right? This is one of those stocks that folks buy and they're holding for years to go in the future, right? I'm one of those that I don't care. Tattoo Chef could be $30 tomorrow. I'm not selling that stock. I don't care. The stock could be $35 tomorrow. I'm not selling the stock. I don't care. That's a long-term hold for me because they got a crazy runway of growth for the next decade plus. Like, when does Tattoo Chef stop growing? I don't know. I just know it's not this decade. It's just the big question for Tattoo Chef is, do they grow at an average of 10% a year, 20% a year, 30% a year? I think that's the big question there, right? And so, again, if short sellers are ever shorting a stock based upon valuation, always a bad decision, because stocks are going to trade at whatever they want to really trade at in the end, and whatever the shareholder base is going to trade at. That's one of the sins that short sellers made in shorting good old Tesla Maslow, right? They were shorting that stock saying, oh, it's overvalued, the price is too high. You don't short a stock based upon that. Tesla's not going to trade at the same valuation, the same price to sales ratio, the same forward P that GM trades at, or Toyota trades at, or Ford trades at. It's not the way this works, okay? Amazon's not going to trade at the same price to sales ratio, the same forward P that Walmart trades at, or Target. It's not the way this works, okay? And so, in my opinion, Tattoo Chef, I think it goes to 18 plus before you start to see short covering in mass with that particular stock, all right? When I look at Corsair and Tattoo Chef, these aren't the type of stocks you short. Out of all the opportunities in the market, these aren't the type of stocks you short. You need a miracle to make any substantial amount of money shorting these sorts of stocks. A true miracle. The stocks you want to short are stocks that are like pre-revenue type companies that are extremely speculative. You can't put Corsair and Tattoo Chef in those sorts of categories, right? Tattoo Chef is getting into every single major retailer in the United States of America right now. Costco, Sam's Club, Walmart, Target, Kroger, Albertsons, Vons, everybody, Safeway. It doesn't matter. Sprouts, Whole Foods. You don't short a stock that's getting more and more massively relevant by the day, that's going into an industry where the TAM's going to go up exponentially over the next 10 plus years, the plant-based food space, and is innovating faster than we've ever seen any food company. You don't short that type of stock. That's just flat out, okay? If you don't want to buy it, fair play. That's fair play. If you're like, it's not for me, or I don't like the valuation, okay, fair play. But you don't short that sort of stock, okay? A Corsair Gaming, you don't short that type of stock. The stock's at a forward P of under 20. The stock's at a price to sales ratio next year of what? Under 1 right now? And has a business model that's going to be highly relevant for as far as I can see. You don't short those sorts of stocks. If you're shorting a Nikola that was like a pre-revenue company that had all this hype, or some other EV company, fair play, because those companies need a miracle to make it to the other side, especially if they're trading at some insane valuation, right? And there's many other companies that I look at on the list of stocks that are shorted the most, and I'm like, I can understand that one being short. I can understand that one being short. And there's some of these stocks that I'm like, that just doesn't make any dang sense to short that sort of stock, right? And in Corsair and Tattoo Chef, those just aren't the sort of stocks you short, because if you're a short seller, you need a miracle. In order to make any substantial amount of money in these stocks, shorting them, you need miracles to play out, right? You need S&P 600 small caps to go to lowest valuations you've seen them at since 2011, right? You need them to miss these quarterly earnings in a massive, massive way to shake out more people that weren't maybe long-term shareholders that are like, get real scared, right? You need true miracles. And you don't ever invest in the market. You don't ever make moves in the market based upon you need a miracle for it to play out, okay? That's usually not a very wise decision, especially when you're shorting a stock and you have to pay insane interest when you're shorting, right? And you have literally unlimited loss on the other side. If I buy a stock, if I buy Corsair Gaming, right, my loss is limited at 100%. When you short a stock, your loss is unlimited. You don't short those sorts of stocks. That is like playing with fire. That's all I'm going to say about that. And we'll see how all this plays out, obviously. But man, of the stocks you can short in the market, I'm amazed. I'm literally amazed. But that's what happens when you have these stocks go down and down and down, right? You get short seller FOMO that comes in, where these shorts just continue to pile in, and they think all these stocks are going to $1 a share or something like that, right? We saw this exact same thing play out last year, but not with shorting stocks, with folks going long stocks. The FOMO that was in the market in December of 2020 and the FOMO that was in the market in January 2021 and even into February, the first half of February, was off the charts. Whereas those stocks just went up more and more and more. Every stock out there went up more and more and more. The FOMO reached parabolic levels, okay? And people thought this was going to go on forever. And now, a lot of these stocks are down 50, 60, 70, 80% from their 52-week highs, and the short sellers are more brazen than ever, and they're shorting to the max level, hoping that miracles play out in some of these stocks, right? And it's like, whew, that's a dangerous, dangerous game to play. That's all I'll say about that. To try to squeeze 10, 20% when you're paying those sorts of interest rates, and the brokerages can up their interest rates whenever they want, man. Woo! Man, it's a fun battle, man. It's a fun battle, and I'm here for it. It's a war, and it will continue to be a war, probably for about the next few months. And then there'll be white flags that start to wave. That's all I'll say about that. Much love as always, and have a great day.